And welcome to the Buffett and Beyond Stock Analysis video podcast with your host, Dr. Joseph Belmonte, which is me, and Debbie with the Y. Hi, Debbie. How are you today?
That's me. I'm great. Thanks, JB.
And these methodologies are based on the book Buffett and Beyond, second edition, published by Wiley Publishing. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. All right, Debbie, what's our first stock of the day?
All righty. Well, hello, everybody. Our first stock up is L Brands Incorporated and stock symbol LB. L Brands, formerly known as Limited Brands, is one of the largest retailers of women's lingerie,
Oh, boy. Wow.
and other apparel and personal care and beauty products. It operates approximately 3,075 stores under the names of Victoria's Secrets, Bath & Body Works, includes C.O. Bigelow and White Barn Candle Company, Pink, La Senza, and Henry Bendel. Also sells lingerie via the Victoria's Secret catalog and has about 93,000 employees.
Now, catalog, I mean, who does that anymore?
Well, the women.
But let's look at the numbers, and the first thing we look at is that clean surplus return on equity. And remember, folks, think of your bank account. With the clean surplus ROE, the higher the number, the more this stock is going to appreciate. And the average stock in the S&P 500 has a clean surplus return on equity of about 14.5%. And as we look at L Brands, we can see that this ROE has been declining over the years, which means they're making money, but they're making money at a slower increase each and every year. So it's like a race car that's starting to go slower and slower, still doing fairly well, but going slower. So when we see the clean surplus ROE under 14.5, folks, we don't even go any further, except look over here at this recent dividend of 7.5%. And you're saying, wow, that's a high dividend. And then we come back over here and we look at this retention rate, and the retention rate tells us how much of, or what percentage of the amount of money they are making goes back into the company in order to grow. And for 2019, they're looking at a 17% retention rate, which means they're putting very little money back into the company in order to grow. They're taking all their money and paying it out as a dividend. And then we have to look over here at the revenue growth, and the revenue growth for next year is 1.6%. Folks, that's hardly any growth at all. So the question is this stock going to be able to continue paying that high dividend if the revenue is almost non-existent? And you can see that over the years, it's been low and it's going lower. So that dividend is in question as we go further. Certainly no growth in this stock. But going back to the clean surplus return on equity, as a growth stock, we would not even consider this. And the only reason we went any further was to explain this recent dividend, which we're not too sure is going to last. Right now, they can pay it. But what happens into the future? And then when we look at how this company has done over the past 12 months, we can see it's down about 33%, while the market's up about 5% over the past 12 months. So you can see people are saying, this is not a stock that I want. They're not buying this stock. They're afraid of that dividend, whether it's going to last or not. And they also see no growth in this stock. And then over the past 5 years, we can see with the market up around 60%, which is this black line, you can see that LB is down, or L Brands is down about 55%. So no, folks, it's not a stock that we want in our portfolio.
Alrighty, up next we have Foot Locker, the stock symbol FL. Foot Locker Incorporated is a retailer specializing in athletic footwear and apparel. Operates 3,310 Foot Locker, Lady Foot Locker, Kids Foot Locker,
It's a whole family there,
a few
right?
Foot Lockers, and Champ Sports and Foot Action stores in North America, Europe, Australia, and New Zealand, and has about 49,200 employees.
Okay, everybody has heard of Foot Locker, so let's look at the numbers, and we look at the clean surplus ROE, and we see it is about average. Remember, the average stock in the S&P 500 has an ROE of about 14.5%. So we look at this stock and we say, okay, it's about average, and we see a slight increase going in from 2018 to 2019. So the earnings growth is picking up just a a little bit. And then we look at revenue growth and we say, well, that's not exciting me very much, folks, but the net income growth is 14.6, which is pretty good. So this stock is twixt in between as far as I'm concerned. And let's go to see how this stock has done in the past year. Up about 45%, while the market's up about 8-9%. So it's done very, very well this year. But looking at 5 years, we can see this stock has been all over the place. And yeah, 2017, which is this right in here, folks, this stock just went down the tubes for
Looks
some
like the other
reason.
shoe dropped.
Yeah, so what looks so good for this year is because this stock is coming off a very, very steep decline. But folks, with an average ROE, we don't want to put average stocks in our portfolio, because if you put average stocks in your portfolio, you might as well buy the S&P 500 index. So no, we don't care for this stock at all. It's just an average stock, and with the volatility there, we really want to stay away from this stock also.
All righty. And next up is ULTA Beauty, same stock symbol, same as the name, ULTA. ULTA Beauty Incorporated, formerly Ulta Salon, operates specialty retail stores selling cosmetics, fragrance, hair care, and skincare products and related accessories and services. It offers a broad assortment of over 20,000 prestige and mass beauty products. The company has approximately 1,074 stores in 48 states, primarily located in off-mall locations with an average store size of 10,500 square feet.
It's a pretty big store, folks. Yeah.
It is. That's huge, including 950 square feet dedicated to full-service salons, and they have about 11,500 employees.
Okay, let's look and see what the clean surplus return on equity here is. Well, 26% for 2019. And you can see this has had a nice high ROE, and it's maintaining within a few percentage points that high clean surplus return on equity. What we like about this stock is it has no debt, no years to pay debt. Remember what Buffett says. If a company could take all of its earnings just to pay off its debt, how many years would it take to pay off its debt? Well, in this case, 0, because it has no debt. And dividend, it has no dividend, which we like in a growth stock because we want to see a company put all that money back into itself in order to grow. So that means Ulta Beauty is still growing, so it's putting money into it. And because it's maintaining a high clean surplus ROE, it means that it's getting a 27% return on the old money it has invested in itself and the new money it has invested into itself. So it's maintaining its profit as it goes along and grows. And folks, look at this net income growth and the revenue growth, both over, well, net income growth of 17%, revenue growth of 15. And you can see those numbers have come down, but those are still very, very good numbers. So we like Ulta Beauty. And let us look at the returns, and we can see that over the past year, it's up about 30%, while the market's up about 5%. And over 5 years, we can see this stock is up about 120%, doubling the market returns of 60%. And you can see in here in 2017 that the rumor came out, not the rumor, but the news came out that Amazon was going to sell beauty products online. That scared everybody out of this stock, but the numbers kept high, and even though we thought about selling it, we are numbers people, folks, and we looked at those numbers, and those profit numbers did not come down, and with an ROE of 26%, we say, wow, this stock is maintaining whatever it's doing. So let's go to the 3 stocks and put them side by side so you can get a better feel for the clean surplus ROE. So let's just look at 2019 S&P 500, the average ROE about 14.5%, and then you see Ulta with a 26% ROE, Foot Locker 15%, and L Brands 10.9%. So if you're thinking of the clean surplus ROE as a bank account, we would rather put our money in bank account Ulta, that's giving us a 26% return, rather than Foot Locker, which is only giving us a 15% return, rather than L Brands, which is giving us a 10.9% return. So just looking at these numbers and forgetting that we already looked at some of the returns over the past 1 and 5 years, we would say ULTA should be outperforming Foot Locker. Foot Locker should be outperforming L Brands, and ULTA for sure outperforming the S&P 500. So let's take a look at that once again, put all these three stocks together, and we can see the black line, the S&P 500 index. This red line up here is ULTA, way outperforming everybody else. Again, the S&P 500, this black line. The blue line is Foot Locker, and then this line all the way down here with the negative 50% over the past 5 years is L Brands. Yeah, so folks, those ROEs are a very, very good indicator of what the company will return in the future. There's a big correlation between the ROE and the future return on a stock.
Alrighty, JB. I think we've just about covered all of the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions, not only about individual stocks, but also about the stock market in general. So keep the questions coming, and who knows, we may even answer a question or two you didn't even know you had. And that's about it for today, JB.
Okay, don't forget, if you want to receive a free full month of all our letters with these graphs and pretty pictures and descriptions of stocks, and you want complete access to our computer program, which gives you the ROEs on about 900 different stocks, just go to our site and sign up. And remember, all you need to manage your own portfolio is there, and it's free. Just go to BuffettandBeyond.com, and Buffett is spelled with 2 F's and 2 T's. That's BuffettandBeyond.com. Okay, folks, we had a great day today.
And tomorrow will be even better.
And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We had a good day today.
And tomorrow will be even better.
Okay, folks, we'll see you next time.
Bye, everyone.